Beyond the assembly line, Vietnam's strategic surge in the Singapore Trade Corridor. The economic alliance between Vietnam and Singapore has reached an unprecedented peak, evolving from a standard regional partnership into a high-octane engine of growth for Southeast Asia. By the end of November 2025, bilateral trade volume had surged to nearly 36 billion SGD, a remarkable 25.7% increase compared to the previous year. This figure isn't just a new record. It actually eclipsed the total trade recorded for the entire 12 months in 2024, which stood at 31.67 billion SGD by a significant margin. What we are witnessing is a fundamental shift in how these two nations interact within the global supply chain, moving away from simple commodity exchange toward a sophisticated, integrated industrial relationship. Even on a monthly basis, the momentum is undeniable. In November 2025 alone, total trade reached 2.9 billion SGD, with Singapore's exports at 1.8 billion SGD and imports from Vietnam hitting 1.1 billion SGD. To understand the real health of this relationship, one has to look past the surface level gross figures. While Singapore appears to hold a trade surplus of approximately 13 billion SGD on paper, the data from the Accounting and Corporate Regulatory Authority (ACRA) tells a more nuanced story. A massive 73% of Singapore's exports to Vietnam, totaling 17.9 billion SGD out of 24.5 billion SGD, are actually re-exports. These are goods produced elsewhere that pass through Singapore's world-class ports before reaching Vietnamese shores. When we strip away this transit trade and look strictly at goods of domestic origin, the narrative flips. Vietnam actually maintains a robust trade surplus of 4.88 billion SGD. This surplus is a powerful indicator of Vietnam's maturing industrial base and its growing ability to produce high-value goods that meet the exacting standards of a global hub like Singapore. The true engine room of this trade corridor is the electronics and machinery sector, categories under HS85. In the first 11 months of 2025, Singapore's imports of Vietnamese electronics and electrical equipment skyrocketed by over 105%, reaching nearly 5.9 billion SGD. This isn't just incremental growth, it's a doubling of capacity that highlights Vietnam's solidified position as a premier global manufacturing hub. On the flip side, Singapore serves as the critical energy and component supplier for Vietnam's industrial machine, while Singapore re-exports high-tech machinery valued at 12.8 billion SGD, of which 96.8% are re-exports. It also exports domestically refined fuels and petroleum products valued at 3.7 billion SGD. In this fuel category, locally produced goods account for 99% of the value. It is a symbiotic loop. Singapore provides the refined energy and the high-tech brains components, while Vietnam provides the massive muscle, assembly and production. Beyond the raw data, there is a massive window of opportunity opening for Vietnam to transcend its role as a mere factory floor. As global companies continue to pursue China Plus One strategies, Vietnam's proximity to Singapore's financial and logistical ecosystem offers a unique competitive edge. The surge in exports of optical, medical, and measuring instruments (HS90), which reached 103.3 million SGD, suggests that Vietnam is already beginning to move up the value chain. There is a burgeoning opportunity for Vietnam to pivot from low-margin assembly to high-margin research, development, and advanced manufacturing. By partnering with Singapore's world-class universities and tech incubators, Vietnamese firms can begin to co-develop intellectual property rather than just assembling parts designed elsewhere. However, staying at the top requires more than just high volume. It requires a relentless commitment to quality. The Vietnam Trade Office in Singapore has been clear. For this growth to be sustainable, Vietnamese enterprises must treat quality as a non-negotiable prerequisite rather than an optional upgrade. In a market as sophisticated as Singapore, which often serves as a gateway to the rest of the world, reputation is everything. This means maintaining rigorous standards across the entire production chain, from the purity of water used in agriculture to the precision of the final packaging. Embracing ESG, environmental, social, and governance standards will also be a game changer. As Singapore moves toward a green economy, Vietnamese suppliers who can prove their products are sustainably sourced and ethically manufactured will find themselves at the front of the line. Looking ahead, the potential for a green and digital partnership is the next frontier. Singapore's hunger for clean energy and Vietnam's vast potential for wind and solar power create a natural alignment for future energy exports. Simultaneously, the digitalization of trade using blockchain for logistics and AI for supply chain optimization will likely be the next big boost to these bilateral figures. Vietnam is no longer just a participant in the regional economy, it is a driver. If the current trajectory holds, the record-breaking 36 billion SGD of 2025 will simply be the baseline for a new era of Southeast Asian economic dominance.